All right. It's 4 o'clock and it's time to rock. What's up, guys? Man, I got a lot of stuff to talk about this week. This is going to be a little bit of a gloat stream. I feel like I deserve it because I've taken a lot of flack for being a short MicroStrategy for a year now. And so, fill before you shill. In other words, close your position before you start talking about it. So I did today. I always take profits too early. But we'll see what happens. And late breaking news. This is just kind of, it's not funny, but apparently Epstein funded Bitcoin core development a decade ago. That recently came out from these files. And if I was feeling really clickbait baby, that's what would have been the topic of the live stream, but I'm not. That doesn't really matter. But Bitcoin, where it's at right now, does matter. And I'm going to talk about that a little bit. It's been interesting to read social media and see some of the sentiment, we'll call it. And we'll look at that, along with what else going on this week and where I think things are going. But yeah, I think that things have definitely come down to a support, at least on MicroStrategy. That's why I wanted to talk about it. And yeah, we'll look at the rest of the crypto scene and the market in general. People were kind of freaking out, but we just made a new all-time high 2 weeks ago. In stock market, that is. But yeah, let people filter in and we'll talk about it and see, get my opinion of where I think things are going. I'm a we'll see Chad, but this is interesting as we go into the rest of the year. So stay tuned. I'll be right back. All right. So yeah, um, if you guys have seen The Big Short, you should if you haven't. Christian Bale plays Michael Burry in that movie, and what he goes through in that movie is what every trader that's in a long-term position of conviction goes through, which is having moments of confirmation and then moments of questioning your own sanity. And through it all, I've stayed short with puts. I actually had some going all the way out to January of 2027 that I went ahead and closed today because the price has come down to a technical level. And it's really impossible to gauge sentiment anymore on social media because people are acting like this pullback on Bitcoin and everything else is just the worst thing ever. But I mean, you're not that far from the all-time high, all things considered, and definitely far away from the lows that were 3 years ago. So I decided today to go flat on this because I have endured. I'm an emotional person. I'll just admit it, and I have sat here being wrong. But I mean, at the same time, technically speaking, using what I like to look at on charts. There wasn't really that much of a reason to. Well, yeah, there was. I mean, in April this year, Bitcoin and Microstrategy all went down, and that was when I was feeling pretty good about my position. And then, as the year went along up into August, obviously it wasn't. But today, the level it got to is the former. I can't say it's an all-time high because one of the reasons that I shorted this is because of this. Hold on. I mean, this is the long-term chart of MicroStrategy going all the way back to the dot-com era. Kudos to Saylor for keeping a company alive after all that. But the reason he went down 20 years ago was because of accounting. It's not fraud, but he definitely he had to pay a fine for his accounting practices. And he was doing the same thing back then. He was using financial engineering to try to pump up the stock of his company. And I I just don't like somebody going onto the market, open things, and telling people to mortgage their house, mortgage their business to buy his stock. And then saying that it's riskless and give me your money, I'll make you rich. I just don't like the guy, and I've been very interested in the products they offer. Like they've got the STRC I talked about last week, which let's see what that did today. This is something where they'll pay, I think, a 10.5% dividend monthly. I mean, 10.5%, that's pretty good. They're always going to try to keep the price at 100, which it was at the beginning of the week. The price of the par value of this is 100. So basically a fixed income product that they're trying to offer. And the reason they're offering this is so they can get money to buy Bitcoin because they can't sell shares anymore. And actually, interestingly enough, I saw that their MNAV, in other words, the amount the company is worth based on their Bitcoin holdings today went below 1. So in other words, now the company is less valuable than the Bitcoin that they hold. So that's going to be interesting. But you know what? I'm going to take a step back and I'm just going to say the meat of the trade has ended. I started this back in November of last year and I'm ending it here in November of this year. And so it's been a long road. And yeah, it's I took a lot of flack from people about it. Like I like to hang out in Bitcoin communities and be told that I'm wrong, especially about this, because this is one of the things that, they've been very, very, very bullish about. And I'm not gonna go and I'm not gonna rub it in because I'm a real trader. I know the pain of loss and there's no reason for me to talk about it. I mean, I can just say it worked out well for me, but I'm not going to go and poke them like they poked me because the market is the best teacher. There's nothing they're going to learn from me. They're going to learn that when everybody on social media is telling you that this is the best thing ever, it is not. Every single time I've read something about God candle loading, it has actually never loaded. And yeah, so we're going to go flat. We're going to see what happens here. I mean, there's two things that happen at this level. Of course, that's the last high, but more importantly, it is basically the major volume profile node of this yeet from starting in September of 2024. So it's come full circle back to where the trend began. And so it's a good time. I think last week I might have talked about this, but there was, let me go to my Twitter and find it. Hang on. Oh, by the way, there's something Bitcoin Epstein related. I'm hesitant to talk about it because it's kind of dumb. It doesn't really matter. Epstein didn't fund Bitcoin development, but these emails came out this week. Everybody's talking about them, and I'll share that here in just a minute. But another trade that was closed was this right here. where I thought this was a really good trade. It was a long Bitcoin, short MicroStrategy hedge trade. And I think Jim Chanos is someone that's been a hedge fund manager for a while, but this was a very public thing that they put on. Of course, they got ridiculed for it by the Bitcoin maxi communities back at the time. But basically, that made a lot of sense. I mean, you had um, a lot of people that thought for some reason that MicroStrategy was worth more than the Bitcoin they had on the books. I think when they started this, it was at like so about 3.5. The company was 3.5 times more valuable than the Bitcoin assets that they had. And now it's dropped all the way to one, close to one. And so really, I think the meat of the short on MicroStrategy is now over, but I always take profits too early. I left on like one put for December 2027. That's it's not in the money. It's a 160 put, just to be fun, just to see what happens. But yeah, it took a long time. By the way, I don't like. Another thing I used was SMST, which is the leveraged short. There we go. Is the 2x short. People always come in here and they ask me like, hey, what about this leveraged ETF? I don't like leveraged short ETFs because the risk is asymmetrical. In other words, math happens where if something goes down 10%, if MicroStrategy went down 10%, you would make 20% on this instrument. But when MicroStrategy would go up, you would 10%, you would lose 20%. And of course, we know it takes longer, it takes more percentage to get back from being down than going up. And so what ends up happening, even though this thing was making money at times, it eventually just bleeds out. And so this didn't make me very much money, the SMST. So again, I needed another lesson on why not to use these things. The puts were okay. They had to eat a lot of theta on them, but we done good. We done good. And so now I get to sit back and see what happens. As far as Bitcoin goes, that's the more interesting thing. I mean, what's funny is that, I've been trading Bitcoin since like first one I bought was in 2012. And it was, I've seen every single cycle, and it's just kind of funny to me, just the ratcheting up of the emotion that's on social media right now. They're acting like this is just the worst thing ever, and you're only you're only a month off of the all-time high. I mean, come on, like it's not that bad it shouldn't be that bad for the true believers in it. It's just that I think the problem is people ratcheted themselves up. And the reason I just can't be bullish, back then or really all year is because of the arrogance. Like everyone all year has just assumed that Bitcoin's going to go to 1 million and they're going to be as rich. It's really about personal, I'm going to be smarter, I'm going to be richer than you kind of sentiment that has been pervasive all year long. And now now they're beginning to question, oh, wait, you mean this is an asset that can go down? You mean there's risk? They were all told, they all got into these, circle jerks about how it's riskless, government's going to keep printing fiat, Bitcoin's going to keep going up. Maybe, but there's a cyclicality to all things. Cyclicality to stocks, cyclicality to the weather. Because what this ultimately is, price is a reflection of what people feel something is worth. And people's feelings, especially en masse, are fickle. And yeah, the best thing you can do is model it using technical analysis. And a lot of people don't like that. A lot of people don't think it's necessary. But, last week and the week before, let me just clean things up here and we'll talk about it. Price responded to a 50% level, 100,300, which it held pretty conclusively. That's the 50% of the April low to the all-time high. And so now, yesterday, Thursday's bar closed below it, and it goes to find the next level. And the next level is going to be, I'm going to look for the volume profile level, which is going to be of this whole past movement. This was today's level that I said for people to watch, which is 96,000, about 600. And this is going to be the level to watch this weekend. I'm not gonna say, "Oh my God, it's dead," but that it could very well come back up before Sunday and close within this big volume level. I mean, the next one would be from basically the April price action, which is going to be about 84,000. But I don't know if it's going to get there quite because people just aren't going to give up. People are just not going to give up and start panicking yet, even though social media, they act like they are. There's still a lot of hope that's alive, and you're not going to see full despair at this point. It takes a long time in the cycle, in the price cycle, for despair to kick in. And even though the daily price action is still and has been trending bearish, is bearish on the daily, price and momentum are below the cloud. If you go to the weekly, it's still bullish. And so I think it's a good time to take profit on shorts. But we're not full on panic mode yet. Even though if you read social media, they'll make you think that it is. Hey, what's up, Outshine? Sonny, yeah, I'm curious, Sonny, like why did you get into it at the price you did, 346? Like, what research did you do? I'm not gonna knock you. I'm not gonna knock you, I promise. Like I'm really kind of curious, what kind of information you were taking in, like who you were listening to. Because I mean it was very persuasive and pervasive, the bullishness around MicroStrategy. And I've just developed a sort of it's funny because when I talk to my Bitcoin friends and I talk against MicroStrategy or talk against Bitcoin going to 1 million, they're like, well, if you're contrarian to us, we are the real contrarians, and you've just come full circle to be one of the fiat maxis. And I'm like, well, no. No, I mean, just because I'm the contrarian of the contrarian doesn't bring me back to full circle. I'm just a contrarian in that I've just seen so many of these cycles, and I can't when everyone is just absolutely convinced this. I endured. The reason I'm talking about this so much is because I went when this thing came all the way back up in April after my position was working out in April. It came all the way back up here into the red, definitely into the red here, and I just had to leave my puts on and just kind of close the platform for a few months there. Like, the risk was fixed with puts, and it didn't feel good. Like, it didn't. It fucking sucked. Sorry, this isn't for kids. And every great trade I've made has always involved discomfort. If it feels easy to get into something, then it's probably not a good bet, because a lot of people chase returns. They look at something that's been going up, that has great returns, that's going in their way, and they feel good about it. And that's you have when you're trading, you have to do the opposite of what feels good. And I saw it drop from 360 to 345 and got in to make $5 thinking it'll bounce to 350. It dropped to 327 that day, and I held thinking it'll bounce, and losses kept getting bigger and holding back now. What I call that, Sonny, is I call that the valley of risk. The valley of risk is where something goes outside of your strategy, your plan, and now you're stuck holding the bag because you know what's going to happen, right? If you hold it, it's going to keep going down. But if you close it, it's going to immediately come back up, because you are the market. I am the market. Everyone's the market. And the point where you can't take it anymore, that is the point of maximum pain. And that ends up being the bottom. And there's no answer at that point. If someone went long here, I wouldn't do it, but not because I don't think it's a good level. And you can take it as some hope at this level, although I think you need to walk away from this decision making and not do what you did again. What I would look for, and here's the weird thing. I'm really intrigued, like I was talking about that STRC, with these fixed income products that they're offering on a level of like what they are, like what they're offering, like 10.5% dividend. That's great. Like, guaranteed not to lose money. Oh yeah. But it kind of falls into that too good to be true that zone of financial stuff. And I think Sailor's a con man. Um, I just feel that way. I don't know it, but I just yeah, I'm just not going to participate. I'm just not going to, and I'm going to advise people that I talk to that if it's too good to be true, the rest of that statement. And we're going to see what happens. I mean, I'm clearly closing it out because I do expect a short a bounce. Yeah. And will I reestablish my position on a bounce? Maybe, maybe. I don't know. We'll see. But now it all is clearly predicated on Bitcoin itself and what it's going to do. And if there's one thing that it has done for the last 2 years, basically, is proven that people are just not going to give up easy. So we're not going to say it's dead, but I think that the quick money betting on the all-time high failing, which by the way, I just want to recap. The last couple of weeks have been really trying to reinforce this very simple concept of the most effective tool in price action is the false breakout. Whenever you have something that does like an all-time high, and then it comes up, and then it makes a new all-time high, but then it closes back inside the prior all-time high, deadly, 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 deadly bearish. It's so effective. I mean, you talk about dirty, dirty fiat, that dollar. What's the dollar doing? Well, this is a weekly dollar. It did the same thing in the opposite side, but this is the dollar index back in September, where it comes down, pierces that past low, closes back inside of it. I call that a spike, and that is a sign of reversal. And so if you can remember one technical setup, it is this. It is this. So that's what I want you guys to come away from this. But that's what it is. And all right, what was I? Well, real quick though, I saw this come out right before I went live here. All these Epstein files are coming out. I mean, just to be fair, like he's a shitty guy, and the people that used his services were shitty people. I don't think this impugns like Bitcoin Core, but if you haven't been following, there is a heated political debate. It is political between Bitcoin Core and Knots. It's around letting people put arbitrary data on the blockchain. In other words, the miners, the people that make Bitcoin for doing the processing, they want more revenue because the price of Bitcoin is not going up fast enough, and electricity costs, because of AI and just everything, are making it very hard for these mining companies to make money to fund their operations. So what they want is people to be able to put more data. Basically, when you make a Bitcoin transaction, you can upload a document to it. And so they want to leave it open for people to spend as much money as they want putting stuff on the blockchain. The other side wants people to be limited so the blockchain doesn't get bloated. And those are the two political factions, and they're very mad at each other, and they're competing now to see who wins and see who actually gets control of Bitcoin. And right now the miners are winning because they're the ones with the most economic incentive to actually do it. But this comes out, which they are using to kind of beat, this came out that you have Core and Knots, and Core are the people that are pushing for the more data, more money for miners. And comes out these files that basically Jeffrey Epstein donated to this faction a decade ago. He donated to the MIT Media Lab, which allowed for the hiring of Gavin Andresen and Vladimir van der Laan in 2015. Who cares? Who cares? But it's something that they're now using, just like the political parties are, to basically beat their opponents over the head. I was like, oh, you naughty, you took Epstein money. It doesn't matter. It doesn't matter. But I find it funny that it's being used for the same reason, just to score political points with people. But that's funny. That's funny. So. All right, let's see. Another thing that's kind of been interesting about, commentary is the breakdown. I've talked about this before. The M2, the global money supply chart, a couple months ago, if you follow social media analysis that are on there, people would draw this chart where they would show the M2 global money supply. And it's, I love curve fitting because it's fun, but it's also like dumb because you can make data, you can make a chart show whatever you want to show if you're approaching it from there. And so what people would do is they'd shift the M2 money, the yellow line, they'd shift it to where it like matches up perfectly with Bitcoin. And so, okay, well, you got to shift it back 10 weeks, or you got to shift it back 12 weeks, or you got to shift it back, 4 months. Just these different kinds of ways that people would make it look like, oh, this is a leading indicator for where Bitcoin's going to go. And of course, I looked at that. I was like, I'm not going to knock it. I'm always open to new indicators and things that worked. But I had a little bit of skepticism to it. And of course, now this is the M2 money supply is continuing to go up, as it kind of always does, because the prices of goods across the world are going to continue to rise, just because every country's participating in inflation, devaluing their currency. This is so it's detached, and so now they got to come up with a new narrative to try to explain away what's going on with that. So yeah. But as we get into this, by the way, guys, if you have symbols to look at, we have some really good symbols to look at, and we'll double check from I think it was last week. KKR, DKNG, Chipotle, AMCX, and OSCR, which I took this week. That's a medical company. I really want healthcare companies. And so we'll look at that. But if you have symbols to look at, make sure you post them in the chat, because that's why I do this, is to generate ideas and opportunities. So yeah, and we have fun looking at stuff too. But yeah, let's take a look at the markets here. Let's just talk about what's going on this week. So by the way, one thing that happened this week. So I have a little niche, personally made a scanner in Thinkorswim. Let me pull up bullish ones. How many hours? I need 30-minute bars. So every morning I do a scan for 30-minute spikes. You remember the spikes I talked about earlier? Yes, we'll look at oil, definitely. I talk about spikes, right? Like the spike on Bitcoin, which was a false breakout on the weekly. I look for 30-minute spikes on stocks. I scan for them on Thinkorswim, and generally you get maybe about like 5 to 10 on average in any given day. And then out of those, I'll look for opportunities. One of the charts right here that I have, Agilent. This is one that I took back in the summer months, which has been doing quite well. Ooh, did this? Nope. Not a false breakout yet, just a little wick. But this, let me go back and show you what it looks like. By the way, the spikes themselves, these little things, these are free on TradingView. If you want them, just send me a message on Discord. Join my Discord and come hang out and talk about it. But it fires off a lot, but the ones I want to take are going to be at support or resistance levels. And so this is just kind of an example of how one of these things looks in real time. So this was from, let me just clean this up. Okay, so this was July the 21st, and what you have here is this trend going up, and what happened was, there you go, that creates a 50% retracement level. And that's the three things that I focus on the most: is spikes, volume profile, 50% retracement levels. Don't mess with anything else, really. And this spike happened right at that level. So you have two things happening. One, you have this lot of establishment of like a bottom here, and then the spike comes down. And then this is the opening 30 minutes of the day. That's when a lot of trades are being opened and closed. You really shouldn't try to trade in that 30 minutes. You should let the market settle out. And then once it does, you can have some very interesting signals that come about. And this works on any instrument, any time frame. These kind of spikes, because what's happening is people are coming in and they are selling something off, but then within that first 30 minutes of the day, it's coming back up to close inside that prior range, which is also at a major support level, 50%. And so that is the kind of thing that I like to look for every single day. And this one took a little while to develop. What I tend to try to do, how I play, is I take it on that red line right there, which is another 50%. And my stop is always going to be below that low, clearly, because that's where the market went and did not go any further. And see, again, it can sometimes come and retest it, but it didn't stop out. Now, I took profit first, took off half the position at that 3-to-1 risk reward there, get a little small, and then just let the rest ride for now until the end of the year, or however long. Because people have been talking about leverage getting liquidated, margin stuff. At this point in my career, I don't use any leverage except with options and the way that they provide like proxy leverage essentially. And so this is why I like owning shares, because you can just hold them and leave them alone and let things just happen. But that's the whole underlying premise of the 30-minute spikes that I look at in the morning. And I am very selective about which ones I'm going to take. I haven't taken one in a while because as the market has been like, pushing up against all-time highs, it's like really hard for me to bring myself to that. Oh, and you see, you have a little spike here on the daily. Oh, that's potential, but I would not take this short because you didn't really actually break. You didn't actually make people think it was going to go higher and then slam them back down. It's really just kind of in the middle of this trend here. So my risk is all the way down here. So don't need to worry about it. Plus, I already took money off the table. So that's why I like shares. Just own them, walk away, forget about them. Set your stop, leave it alone for days, months, weeks, years. And so that's just the example. Now, why I bring that up is because today, let me do some math. Okay, hold on. So it's, is it 13 bars back? I do a scan for these in the morning. Like I said, there's usually about 5 to 10 of these on average. I'll see if this works here. Now the market's closed. Okay, not 13. Let's do 12. Basically having to tell it, go back and tell me what you had this morning. How many spikes did we have in the entire S&P 500 this morning? 74. Highly irregular. Highly irregular. And so on days like this, I don't actually go through this whole list and try to find opportunities. I could. There probably would be some good opportunities here, but I'm just kind of overwhelmed. But it's more systemic when you have something like this happen. And what I mean by systemic is the entire market sold off in the morning only to rally by the end of the day. And you can actually see that if you go to the S&P futures, and you can see that here's the 930. The whole market as a whole came down, spiked that pre-market low, and yeeted from there. Kind of sold off at the end, but that is a market-wide bullish signal. And so I have to take a bullish opinion, at least short term, on the market as a whole based on that. And that's how I use that scanner, is I try to find individual opportunities. But when the whole market flashes a signal, I take it as a market-wide signal. And so there's that, which is bullish, and you can kind of see where this is happening. Let me actually backtrack and see. Is that actually the volume profile for this whole thing? It's close, but I mean, if you look, here's the daily chart, is basically smacking up against that, the volume profiles levels where most of the trading has happened over the last several months. It does not want to go down. Now, that being said, if this thing were really bullish, you would have thought by about Wednesday of this week, it would have come back up and it would have made you a new all-time high on the stock market. So we're kind of in the middle, but I always try to presume that stocks only go up. So I'm still feeling pretty bullish about the stock market actually at this point. There's no like clear warning sign, and the today flashed a big bullish sign. So what I typically try to do in these situations, and when I see something like that, is I take a A SPY put credit spread. Don't really do credit spreads that much. It's a sort of a loose bullish position in that, I'm going to collect premium as the market goes up. I don't have to be too right about it, but it's so useful when you look at a signal like that to just say market going to go up, high probability from that signal, that you can take a 2-week bet saying that over the next 2 weeks it's probably not going to go below the low that it made here. Now, anything can happen, but such a big market-wide bullish signal as this, it's pretty bullish. So feel pretty good. Stocks are not going to die. But you know what else refuses to die is Monero. Now I'm kind of there's again two things that are happening technically with Monero. Monero, by the way, is the cryptocurrency that I like. I still think it is the real asymmetric bet, even at the rise that it's had all year. Monero is up. Monero is another thing that's been really amazing and I would say amazing and interesting this year, because you had a big yeet in the middle of the year when there was apparently someone that stole a bunch of Bitcoin and converted it to Monero to make it anonymous. And then you had in August this sell-off from FUD, fear, uncertainty, and doubt, that someone had taken over the network. And then now, for no real reason whatsoever, we're back to making new highs. Now, it's not the all-time high, but I mean, really and truly, and people see this on, or people say that this is one of the best charts in crypto. And this is going all the way back to 2016, the foundation of it, which was in 2014. I agree. One of the things that's kind of vexed me as a trader about Monero is it doesn't really conform to trading setups. I'm just forced to hold it as a private store of wealth. And so I've taken a lot of shit all year. Basically, I started getting really interested in Monero in 2023 because of all the high profile hackers that had stolen Bitcoin, and they got caught because Bitcoin is traceable. I was like, people are going to start converting in Monero because it's a lot more private and a lot easier to, keep your transactions anonymous. And of course, it got not too long after that, it got delisted by Binance, came all the way down to 100, below 100. And my faith was tested. Again, the best trades are the most uncomfortable ones. And held through that, waited for all the things to happen, and then held through this FUD right here. And it's just been the most resilient of everything. Most resilient of everything. Being delisted, being banned in certain countries, it continues to be adopted as the actual medium of exchange on the internet for people to buy and sell goods and services, because it's anonymous. It's basically filled in that gap that Bitcoin doesn't fill. And I feel the same way about it as I did 13 years ago with Bitcoin. It's just going to continue being adopted. People actually use it. And what's funny is, just like 13 years ago, I can't give this away. I can't give away Monero. Nobody wants it. I'm like, hey, have you guys thought about, keeping some Monero, holding on to it? I was like, nah, I use it to buy stuff, but I'm not going to hold it. I've got, poo pee coin that, it's gonna 100x. I'm gonna hold on to that. Does anyone use it? No, but it has a lot of promise. This thing has almost a decade of adoption. People use it. In fact, a lot of places, they use Monero, not Bitcoin anymore. Have you considered it? No. I literally can't give this away to people. For the last 2 years, I've been talking about it. And you know what? I'm just gonna start doing this. I'm just gonna start doing this. I'm just gonna do this. Hold on, let's see. This is gonna be my new mantra. I've seen this. It's not unique to me. I've seen this online, but don't buy Monero. Don't buy Monero. You know why you shouldn't buy Monero? Because politicians, governments, the EU says it's bad. Only criminals use Monero. Don't buy it. Monero is bad. It's very bad. Politicians, corporations, they can't trace it. It's bad. You wouldn't want you don't need to be having something that is private and can't be tracked as anonymous. You don't need something that is up. How much this year? How much is it up this year? I really hate talking about the gains because I think that's really dumb. Because a lot of people get into something thinking that, oh, I'm going to make a bunch of money. No, no, no. You're not going to make money on Monero. You will not make money on Monero because, if you make money, it's not like you can show people because they can't see what's in your wallet. You can't brag about it because it's anonymous. You can't show people. They can't see what's in your wallet. They can't see how much you have. So you can't score points. You can't get girls. You can't be, oh, look at my Monero wallet. Don't buy Monero. Don't. Do not buy Monero. Don't. Just don't. I don't want anybody buying Monero. Ever, ever. I'm going to keep talking about it. But don't buy Monero. Don't buy Monero. That's my new thing. That's my new thing. Because people tell you it's bad. And you shouldn't do it. You don't need to have private money. Don't buy it. Don't buy it. All right. Let's look at people's. Let's look at these symbols. Let's go through the list actually. So gold. So okay, gold. I need to talk about because I've been asked about gold and silver this week on Discord. By the way, hop on. King Hang it was. Look at silver. Okay, let's talk about silver here. Interesting. Okay, so last month closed to. Let's just show what it looked like. Silver looked like last month. Last month, silver looked like this. And you have a false breakout potentially because there's a last all-time high from 2012 and 49.82. This is silver futures. Came up and closed back inside that all-time high. So that is deadly for a big trend. But what are we doing this month? By the way, I haven't poo-pooed it. It's just not something I want. But now, this second month, it made up a new all-time high. Interesting. However, this week, it didn't hold it again. So I'm going to stay neutral. I'm not a big silver bug. I got a lot of friends that asked me about this. It's interesting for me to watch, but it needs to be watched very closely at this level. And I think a lot of it's going to be determined by its big brother gold. Okay. And so we're going to see how this month of November closes. We got another half a month left to see if it actually can close to get back above that high and close above it. You got to have that close to really confirm that breakout. But I'm just now checking it at the end of the week here. Yeah, that's actually not good. Again, not good that it didn't close above it, but the month still has promise, and we'll see what happens. Let's look at gold. So gold this week has been kind of volatile. One thing I was watching on gold was to see what it did at its 50% pullback here. And by the weekly, it's actually held it. And so just objectively, I have to say that I'm seeing some weakness here in the trend because you have that false breakout on silver on the weekly, and you also have this hold of the 50% retracement off that high on gold. And so I got to say, I'm not going short, but I would be, if I was long, I would be watching this very, very, very closely because you got some signs here that trend's ending. So, all right. The other stocks go Tesla this week. Earlier, I talked on Discord. I own a lot of Tesla, and I did do something that I swore I'd never do again, which was a covered call on my position. The reason I swore I'd never do it again is because I got tired of managing it when it got out of control. In other words, like if you sell a call and you don't want to lose your shares, you don't want to get called away, you have to constantly keep rolling it. I got tired of that. I'm just going to hold the stock. But you had earnings happen on the end of September. What day was that? Yeah, well, excuse me, October. And then you had, remember, a false breakout right there at the high on November the 3rd. A buddy of mine that also owns a lot of Tesla, he asked me about it because he noticed that the implied volatility of Tesla was starting to get really elevated, which was irregular because earnings were over and it had been going up. And so I was like, okay, all right, IV is high. I see a technical sign of a potential reversal. Let me hedge. Let me sell some calls against my shares. So I did that when it pulled back to the 50%. It was on, was it this week? I think yeah, I think it was early this week. Pulled back on Monday to 447.87. Sold some calls against it, and then actually Friday today at the open, they were already at 50% credit received, so close those out. So played this little pullback on Tesla this week. Just with covered calls, just to kind of hedge the position. I don't want to do it again. I just, the problem is if it would have keep going up, now I got to roll them. Like I said, it's something that can be done, but sparingly. So yeah. SRPT, still the stock that I hate the most, but I'm just going to hold on to it because it's small. Intel just keeps plucking away. Agilent, we looked at. Nvidia and Palantir are kind of in the same boat. These were some things that I sold off back in October to raise some cash. I'm looking to buy a house. And so I remain glad that I did. Even if they went up, I'd be pretty happy. But I'm not saying that tech is over. It's just that it's had a really good run. Now that doesn't mean it's going to be over. I'm just saying it's had a good run, and yeah, we'll see. Palantir though, this was a position that I didn't mean for it to be a big position, but I bought this thing at $6. Excuse me, I bought this at $9, and then I saw it go down to $6, and I bag held at $6. So I was down 30% on my initial investment. So it's not like, ooh, I caught the bottom. No, not at all. It's just I've held it this long, and finally here, in October, I decided to kind of close out half my position in it, and now it is starting to show a sign of, again, a little breakout there, a little spike there at the top. This is bearish on Palantir. Nvidia, again, starting to see some of these. I mean, this is why the market's been coming off its all-time high. A lot of these tech companies, big things that make up the S&P 500, big things that make up the NASDAQ, have actually been showing a little bit of weakness here at the top. Now, that doesn't mean it's going to go down, but everyone's doing kind of what I'm doing, I think. Still have a lot of it, but I have less of it than I did. So yeah, let's look at the ones you guys want to look at right here. First, I haven't bought Humana yet. I'm still being patient. Glad I am because it's coming down. UNH got it all the way down in the 240s when it did that again. False breakouts. Warren Buffett and everybody started buying it. Eli Lilly. This is a breakout. This is what we call a big green dildo bar. This is what you want to see when something breaks an all-time high. Big green dildo bar. That's what you want to see. That's a breakout. Now, anything can happen, but as opposed to where it comes up, makes a high, and then closes back inside, there it is. And Eli Lilly definitely posted this in Discord because, I mean, this, you can go back to 5 years that I've been talking about Eli Lilly. I mean, this thing just prints money. Don't hear about that on social media, I don't know why. But healthcare is something that I talked about this some weeks ago. Healthcare for the next 10, 15, 20 years. Thesis is boomers are aging. They want to stay alive. They got a lot of money. They got to spend it keeping themselves alive. That's the whole thesis. OSCR. This is this is kind of a sympathy trade. Well, not sympathy trade, but this is at a volume profile level. Me and some other friends put a position in because they made me aware of it. I like the setup. It's a messy chart. I don't typically like something that's like doing this, but it's healthcare, and so we'll see what happens here. I bought some this week on it as well. So that's Oscar Health. I need to put that on my list to watch. I'll figure it out alphabetics later. Let's see. UNH, we talked about that, and my favorite Monero. Okay, let's look at oil. Sorry, Jeremiah. I'm not even waiting. Let's see. Oil. Now, oil, just to go ahead and say, is one of those bellwethers of the economy where when people are assuming that economic activity is going to slow down, the price of oil, actually, I don't want to do that. The price of oil goes down in to front run the lower demand for oil. And oil is looking pretty weak. Now, if this was anything else, now notice I've got I draw my line, my 50% from zero, because if you guys remember back in 2020 where oil went below $0 on futures, can't really draw it there. That doesn't make any sense. But if you go from zero to the high that it made in 2022, the 50% retracement of that is about 65. And you can see how it's been dancing around that level for the better part of the last 4 years. And this year, starting in March, it's finally started to give it up. And so if this was any other chart that wasn't oil, I would call this being in the valley of risk, in that it has broken a major support. And if one were in this long, they would now be bag holding and wondering what to do. So if the technical setup is bearish on this, and so it definitely looks like oil is going to keep going down. And see, this is going to be one of those kind of conflicting indicators that, ooh, the economy is showing some weakness. There's always FUD. I'm always going to try to presume that things are going to be okay, but that's an indicator of weakness, oil for sure. So 65 is the level to watch, and it's already lost it twice now and trending lower. That's bearish. That is bearish. HTF. What do you mean by swings, Jeremiah? And by the way, are you talking about higher time frame swings? Let's see. All right. Why don't you answer that? CBRL. Cracker Barrel. Oh, they were in the news. Hey, look at this. Look at this, Jeremiah. I see that you must have the level that we drew at some live stream, because back when this was in the news was like weeks and weeks ago, right? So Cracker Barrel was in the news weeks and weeks ago when they were trying to do a rebrand, and the CEO definitely dropped the ball, didn't understand their customers, a lot of social media flack. And so at the time, I drew a volume profile level for the entire history of it. So now this is one of those levels that I like a lot on stocks that are, dead. Because it's come back to multi-decade volume profile level. And that is 2845, and it's resting on it right now. See, the reason I like this is because you have a lot of people who are like, oh, okay, here's the bottom. Okay, here's the bottom. Oh, no. Okay. I like the oh, no. So, yeah, this is a good level. Almost touched it right there. So I like it. This goes on my notepad for next week. And by the way, Signal G, I don't want to promise something, but I'm definitely going to be out of town on Friday next week. I might do a Wednesday stream. I think I might do that. I'm definitely going to be out next Friday, but markets are getting too interesting for me to take a whole week off. So let's see, CBR, Cracker Barrel. I don't particularly want to own it, but you know what? Be neutral. If you didn't tell, I sometimes prefer not to even know what the company does, just trade the price action. And so we're now getting at this level that's worked out really well for me. This level, by the way, like a multi-decade volume profile level, is what, I based Dollar General from earlier this year on. That's a multi-decade level that picked up in February. Mondelez, it's coming back to it again, but that's another level that I got into. Hershey's was another multi-decade, or within a decade, volume profile level. These work. These really work pretty well. Those are the major ones from this year. So yeah, it is the one marked out. So yeah, Waste Management. This is This is a stock that I've owned for many, many years, over a decade, just like Eli Lilly. It's one of my favorite stocks. Bought this back about, was it a week or two ago when it came down to there, added to it. Actually, I did not have this in my my IRA, so my tax advantaged account. So I finally, the way I bought more is I put this in my tax advantaged account because waste management. I back when I first started trading back in 2012, essentially. Um, when people would talk about what I was doing to people at my old job in tech, you know, they were like, "Oh, fundamental, blah blah blah," and I was like, "Well, I trade on technicals." It's like, "Well, you mean like if the price of shit was going up, you'd buy shit?" And I was like, "Well, as a matter of fact, I own garbage." And so that was kind of the fun thing that I would say about waste management back in 2013. And like, people are going to either have their trash taken out in hard times and good times. That's my entire thesis there. But this just it's not let me down so far. I mean, I would say if someone came to me and said, "All right, what do you think are the companies that have done the best and you have the most confidence in?" And I would have to say it would be Waste Management, Eli Lilly, and Costco. And believe it or not, even though I've owned Costco since 2021, yeah, I bought it in 2021, summer-ish of 2021. Yeah. Because I had a friend that had a Costco membership, and that was when I first got into smoking, you know, meat. Like men get to a certain age, and we either get into World War II history or smoking meat. And I say, why not both? But yeah, and I would go to Costco once a week and I would see the place packed. And this was also back in 2021, if you recall the narrative that, oh, inflation, inflation, we're going to be Zimbabwe, Weimar Republic. And I thought to myself, well, and of course their answer was, you know, buy Bitcoin. And, you know, Bitcoin's done well since 2021, obviously, if you go back that far. But I took a different perspective. I was like, okay, there is inflation. I'm not going to be able to like change that fact. But if we assume that is true, people aren't just going to quit. They're not just going to say, we have inflation, we quit life. No, they're going to change their behavior. And so one of the things that seemed obvious to me was that they would start buying in bulk using wholesale retail places like Costco. That was my thesis. And, you know, sometimes you can be right for the wrong reasons. I don't know if that's true, but it has definitely done very well, seeing as how it's tripled since 2021. So those will be the companies that I think have done the best for me, and I still can't help but have confidence in. And the best part about them is you won't see them on social media. That's not necessarily a death knell for something, but like when people are like, you know, rah, 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 I mean, I just I can't do that. I can't get involved in that. Like that's like a real, it just makes it's bad juju's. Like when people are getting really overly enthusiastic about something, that's the top. And so fortunately, no one on social media ever mentions how great the performance of Costco, Waste Management, and Eli Lilly are. At least not that I see. And I don't want to see it because then I might change my mind. But those are, I mean, you hear plenty about Palantir, you hear plenty about Nvidia, you hear plenty about Tesla, and those things are just like just crazy. Um, these are not crazy. These just go up and to the right. So yeah, not sexy, but they make money, and that's the whole point. So any chance of Adobe going to, well, I mean, there's always a chance. I am a will see Chad. I will give my opinion, but oof, it's kind of gross. I mean, there's always a chance to answer your question, Sonny. But from an opportunity perspective, like let me just kind of circle back. So what Simple G was looking at this week was this, which is a 50% retracement from the October 2023 low to the most recent all-time high, hit 196. That is a 50% retracement. That is an opportunity. It's clean. See that? See how it's just there's the level. You got a little hold right there. It comes up. It's clean. It's clean, clean, clean. Chart is just, it just goes up. Oh, get a little sell off. Holds. Clean. Same thing with Eli Lilly. Ran up. Pulls back to 50%. Clean. And so when I look at Adobe, it's, if you do this, if you go all the way back, if you do a monthly chart, let me take off my spikes. We don't need them. Like where I would actually go all the way far back, and I go back to 2009 to here, and I would draw my 50% like that. And even that's not quite clean. And this is actually a problem. If something was really bullish, it should have gone and continued. And so what it did earlier this year in February of 2024 is not what you want to happen. You want that thing to come up and retest that high and break it. Again, clean, big dildo bar. That's what you want to see. So can it get back to 500? Sure. Am I a buyer here? No, because it has failed to come up and hit it. One that looks kind of similar to this, Amazon, which is another going all the way back to 2001 to its all-time high at the time. It was a little wonky down here, but it still held that 50%. In fact, where it came down to touch, which actually started getting me really onto volume profile levels, was using the volume profile to kind of play off base there at 88.69 was an even better entry for there. But this was like a generational opportunity on this Amazon. I remember there was no, like, Amazon wasn't going into bankruptcy. It was just pulling back in 2022. It came to this level, 94.46. I'm like, hey, this is a 20-year, 50% retracement. I can't find a trade more obvious ever. And then when it comes up and comes up to its past high, kind of messes around a little bit, maybe fakes some people out, but breaks it. That's what you want to see. So, I'm not a buyer of Adobe because I want, when I look for something to buy, I want a clean setup. I want it to fit the indicator that I use, volume profile, 50% spike. And then when I'm analyzing the trend, naturally, what you want is you want a stock that you own to do this up and to the right. That's what you want. Like, you only want to buy winners, by the way. Do you know that's what you should do? Only buy winners. But I want things to win. And so when things stop winning, it's not a good sign. Yeah. Meta, that's the worst ticker, about 200 down, almost 200 down per share. Entry of 522. I seem to enter tickets. Well, okay, let's talk about that, Sonny. Like, tell me if you want, like, what made you enter Adobe? Like, what was your founding principle? Like, what was your thought process getting into it? I mean, were you on social media, or did you like the company? I mean, what that's where the meat, like, just forget about what you're down on it. Forget about the price you bought it. Forget about the money. Just work on the process. Work on your process of how you evaluate things and what you do and how you do it. Okay. See, I have sometimes a maladaption to opportunity, because when a lot of people are super bullish on something, when the price of something like gold, for instance, I remember back in it was back, shoot, this was at 2,900 gold was about right here. And I started seeing some rumblings on social media about redemptions or something like that. I can't remember, but I just take that as just astroturfing. In other words, hedge funds just, I presume that if social media is yelling about something, it's wrong. And so I didn't buy gold at this point, and now you see what happened. That's because temperamentally, I can't buy something that looks like this. I just can't. I can't buy something without like a significant pullback. I can't. It's just like I said, it's maladaptive. I've adapted myself, and it works against me because I miss things. And so I will not buy something like this, and I will miss out on this. And that's just me. But I also don't find myself in positions where I'm bag holding something and wondering what to do. And so you take the good with the bad. Definitely missed out on a no, so like let's call it a 60% run on gold. It's fine, but that's just my personality. So you don't suck at no, don't. I say that about myself too, but don't say that about yourself. Do as I say not to do. I saw Adobe drop 30 points on earnings, and I bought some thinking it's the dip. It dropped almost 200 points now. My issue is I am for small game, but I can. Well, you get fix it. Stop. It sounds like also you're entering based on feelings, and you're staying in based on feelings. Notice how I've got some set things that I do, some levels, and if it doesn't hold that level, I'm out. And like I said, about last month, I was going to buy a house, and so I needed to build up some cash, and I knew I kn- I knew that I needed to sell tech because tech had was over 40%, like tech stuff was over 40% of what I own because tech has just gone crazy over the last several years. And so I was like, okay, just, I like NVIDIA. Yay, AI. I also have a lot of Google. In fact, I've owned Google since like 2009, I think, 2009 or 2010. And yeah, so but Google was actually now I sold half of my Google from way back then too. And now it's up more. Oh well, but it was hard because I use Google. I have a Google phone. I use Gmail. Um it was very difficult for me to like sell the stuff that I've owned for so long and I still believed in. But I also had tech ETFs or tech based mutual funds, and just just straight up, just cut them, cut them. Why? Because I don't care. It's just an ETF. It's made up, but the ETF doesn't have a personality. It doesn't have a soul. It doesn't have. I'm not in love with the ETF. I was neutral on it. And so, what you may be having a problem with is you get into this, and you may like it too much. And yeah, exactly. I trade on emotions. Can't get rid of the habit. You can. You have to. I'm very emotional. That's why I build rules around me. Like I said, I don't buy things that are in a yeet. You know, rise in price. I just don't do it. I also, if something closes, like does a false breakout, I cut it. There are things that happen enough times where like, no matter how good I feel about it, I just do it. And so you just need to, you read anything, they're going to tell you, oh, you need trading rules. Well, yes, find some rules that make you quit doing stupid stuff. Not that what you did was stupid, but could have worked. If you could have worked, you would have been a genius. So let's not call it stupid. Sorry, it's not stupid. Um, build rules around your emotions that protect yourself. That's what you got to do. Um, I started trading after I lost my job in COVID, and all my life savings is 90% gone. Are you serious? You're not trolling me, bro? First of all, trading. There's a trader I know that's a better trader than me by far. He is even keeled. He'll get happy about things. He'll make jokes, but I've never known him sad or angry. And he also doesn't go crazy. Woo! He's just like that. He's like a rock, just straight as an arrow, unemotional. I affectionately say that he's a psychopath, at least when it comes to markets. And he works a full-time, very high-paying job and throws money around like he doesn't care. And that's what makes him deadly. You can't trade without a job behind you. You can't trade without at least 6 figures of capital behind you. It's not going to work. You care too much. You've taken a lesson, and if you're serious, you need to stop. Just stop. Get you a job. I know it might be hard, but get some confidence behind you that you don't need money from trading, and then you can start again. Okay. Okay. Good. 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 Well, you got 10% of your life savings yet. You've gone through a process that has taught you something. Um, like I said, like I started at the beginning of the live stream, I was down a lot. I don't talk about money, like amounts, but I was down an uncomfortable amount myself this year. But I didn't, I closed the platform for a few months there when MicroStrategy was going against me. But it's okay to take breaks and come back. I've been doing this for over a decade now, and I've had months and even years where I've wanted to quit. I haven't had that many down years. I've only had like one really bad down year, because the market's just been bullish. And so I haven't even been tested. I think like 2008 tested. It's coming, but take a breather. And if you figure out that this is still what you want to do, come back now with a new education. You paid a lot for your education. It would be a shame to not use that education, but I'll understand if you don't. I don't care about past losses, but even new positions like MicroStrategy I entered last month is a profitable trade, just trying to see if it works one day. Well, you gotta figure, you need to go back and see what worked. What's a good trade you've had? What's a good trade? Tell me a good trade. Thanks, Alexander. Tell me a good trade that you've had. What's worked? What can you do more of that works and less of what doesn't? I know there's a bit of a delay, but I'm glad you shared this with me actually, because this is hard, man. It really is. Like the reason I made this whole stream today, it's I kind of on my Discord I call it a gloat stream, but it's been a rough year with this MicroStrategy position. I mean, it sucked being short through this, but I feel like I can take a little bit of a victory lap now, especially since I closed the position. Um, and I questioned it. I questioned what the fuck I was doing a lot of the way. So Google earnings in 2023, I made 51K, but I put 200K on that. So lucky, I guess. Did you hold on to the shares? Or are you doing options? That may be another thing that you're doing. You may be taking way too short of a horizon. I think you've recognized that your winners are very small and your losers are very big. Right. And that's one of those things that it's just obvious you got to reverse. And again, it comes back to the emotion. Like, we're afraid of, losing, the profits we've made, but we hope for something to come back. And you just got to reverse that. You got to hope for bigger wins and fear bigger losses. You just gotta take small losses. I mean, when something goes against you and you start like, it's the reason I was able to stay in the MicroStrategy is because it wasn't that big. Like it was under 3% of, my capital. That I probably would have only lost about like 1.5%, at the worst case scenario. Okay. And that's how small it is, probably even smaller but it made me feel bad for sure to look at my account and see it that much red. But nothing was going to change my life if it went bad. I would just get ridiculed by all the Bitcoin maxis for being so wrong, and I'd have a little bit less money that I can make up someplace else because we're still in a bull market. But you can't put yourself in a position where you're going to impact your life. You had leap calls on Google went from 130 to 142. No, Sonny, this is why I do this live stream. There's ways that I could talk about like how great MicroStrategy is, how great Bitcoin is, and how, everyone's going to be rich if you just follow me. But no, I'm a real trader. Like, I'm a contrarian. I say things that people think are dumb at the time that end up working actually. And I'm here to teach and I'm here to help people. And I'll spend as much time as I need to, because look, I understand trading is a solitary thing. Like, you eat what you kill, and it's hard. That's why I said, I'm not going to go, I'm going to say, I did this, I made money, but I'm not going to return the dunking on that I took for MicroStrategy, because I understand how much it hurts. And so I'm not going to donkey back, and I want to help people. And I try to always, when I'm talking about things like, why did I take this? Why did I do what I did? I genuinely want to help, because this is, I work from home. This is why I like to talk. I like, everyone needs socialization. So no, you didn't hijack the chat. In fact, this has been like one of the best things that's happened to me in a long time. You talking about honest, real stuff. So that hopefully you can, and I'm telling you stuff that any trader will tell you. I just hope I can get through to you. But what I want you to do is I want you to do the obvious things. Flip, take small losses, take big gains. But as I said, earlier on, at this point in my career, I don't use any leverage except options. I'll use options for certain, to express certain trades, but I own shares, and this is not rubbing in on you, but if you had just bought shares, or hell, if you had just let those calls exercise and become shares, if you just held on to them, and they would have turned into 100 shares apiece, if you had the buying capital for that, where would they be now? I mean, I think you know the answer, but like, what I'm realizing now, over a decade into my journey, is, and this is of course all predicated on, the Fed printing lots of money, um, own things, buy assets. Bitcoin is an asset. Stocks are an asset. Gold is an asset. Real estate is an asset. Guns and ammunition are assets. Um, they're going to keep printing more dollars, and as long as people want what you have, they will buy it from you later. Hope that makes sense. So, and this is why so many people are getting behind in life and society, is because they don't have enough capital to buy assets. They're busy spending so much on day to day, rent, food, bills, and they don't have money to put away. And that's why they're falling behind when everyone else is getting richer, because they have the money to just buy in assets, and they don't have to take it out. They just let it sit there. And so options are kind of pernicious in that you're able to have leverage in these stocks, but you never own anything. Okay. And so, what I really want people to do is participate in capitalism and participate in investing in companies that you think that the market is going to think are going to be worth a lot more in years to come. That is my long-term view, and what I hold with, like I said, companies like Waste Management, Eli Lilly, um, Costco, and Tesla. But Tesla's, it's weird, but I'm not gonna touch my shares. I have a Tesla. It's fucking amazing. So, great product. But it's gonna be a very volatile ride. I know, but I'm not gonna sell. And own assets, and then play around with options. Like MicroStrategy, I used options for that. Um, but that's a very specific case, and that's going short. I didn't want to go sell short the shares, because unlimited risk to the upside. I don't like unlimited risk. Puts are fixed risk. That's how you should use puts. Puts are a fixed risk leveraged instrument to express a trade. But when it comes to, if you're going to go long a stock, just buy the shares and don't even use margin. I know it's enticing. You can't really get that much in stocks, 1.5x. Um, and it's going to take years for it to play out, but you're going to have a lot more money at the end. All right. So that's my campfire message to all you kids, I guess. Um, hop on Discord, Sonny. Come talk to me. We'll talk some more. I'm gonna get some dinner right now, but that's gonna close it out for this week. Thanks guys for hanging out, joining me. I hope you guys follow, like, share, subscribe, and remember, don't buy Monero. Everybody, bye bye.